Hello, good day everyone. Today we are going to be discussing about the order block and how we can be able to refine the order block and find high probability trade setup while trading them. So without wasting much of our time, let's get started. What exactly is the order block? An order block is an algorithmic PD array which shows the change in the state of delivery of price action when the algorithm changes from a buy program to a sell program. So it's showing the change in the state of delivery of when the algorithm changes from a buy program to a sell program, or to a sell program to a buy program in a specific in a specific price level or PD array level when it's aligned with time. So it has to be aligned with time, but that one will be taught in other classes. So I just want you guys to focus that know this, that another block is what the function of another block is, that it changes the state of delivery of price action when the algorithm changes from a buy program to a sell program. So with that definition, we can now say that we have two types of order blocks. We have the bullish order block and the bearish order block. And mind you, an order block is not anything relating to supply and demand. This concept was created by ICT himself and is the author of order blocks and smart money concepts like fair value gaps and the gaps theories and so on. So it's nothing relating to retail logic of supply and demand zone and all that. It's nothing like that. So without wasting much of our time, let's talk about what the order block is and how we can use them. So in this lesson, I'm going to be using a bearish example. So what I'm saying can be reversed for a bullish example when you want to look for a bullish order block. So we are going to be looking at the bearish order block in an underlying bearish market condition after we have established that from our higher time frame. So now, what is an order block? A bearish order block. A bearish order block is the last up close candle. The last up close candle. The last up close candle is what we want to be looking at. So the last up close candle or series of up close candle that is traded through. So if we don't get this, look at this, we have up close candles, series of up close candle, but we are looking at the last up close candle. Assuming it was traded through down here, we would have not annotated it as our bearish order block, but it was traded through down here. So we look at the last up close candle that was traded through. That validates the bearish order block. So let me zoom in so you guys can see this properly. So yeah, so now that is what delineates our bearish order block. So this is the bearish order block. The bearish order block is this last up close candle that is found near a swing high. So we include the swing high, we mark the swing high. So this is a bearish order block, because this last up close candle was traded through and price retraced back into it, tested it, then moved down. So but I'm going to be explaining the criteria how to validate a high probability order blocks. So we want to be seeing the last up close candles being traded through, and what are the next thing that you look for when to validate an order block. So the next thing we look for to validate a bearish order block is that we also want to be seeing a fair value gap beside the last up close candle. After the validation, we must see a fair value gap that was created. We must see it created. So we need to see that fair value gap being created here. So it is next the up close candle. So now how does it look like? This is the fair value gap. So that fair value, you have to see a fair value gap. The reverse will also be in the case of the bullish order block. The bullish order block will be having a down close candle, like this candle, the last down close candle, and you need to be seeing a fair value gap just like we have here. Can you see why I say it's a change in state of delivery from buying to selling, or from selling to buying? But I'm using the example of a bearish order block. Now this bearish order block, what do we need to see again that makes it high in probability? And also after we see this, we must also look for we must also take note of the three sensitive key levels of that order block. What are the key levels? The high of this order block, the low of this last down close candle, the opening price, and the main threshold. So there are three key sensitive levels to look for when price will be, where we can expect price to reject when it's going up to fill this fair value gap to validate this bearish order block. It can touch the low of this last up close candle that was being traded through and reject, then price goes lower, or it can reject, you can have a rejection at the opening price of this last up close candle, and then also price can sell off, or it rejects most times at the main threshold of this last up close candle, then price sell off just like this also. But most strong order block, most other blocks will not likely violate their main threshold, although they can trade or weak, they can weak above it, they can trade by weakening above the main threshold, even close to the high sometimes. But most strong order block, most order block that are very very high in probability will not violate the main threshold. Okay, so let's just get started. Let me just show you what it looked like when I said it will not violate it. So how do you get the main threshold? You take your fibs, you anchor from the opening price body of the last up close candle or series of up close candle down to the closing, the opening price of the up close candle or of the series of the up close candle down to the closing price of the up close or series of up close candle. So that's how you do. So this is how it looks like. So now you'll be getting something like this. So I told you that price can, these are the key levels, the three key levels, not the key three levels, the low, the open, and the main threshold. So that's how you note that this is a high probability bearish order block. So what else do you also use to note this order block is high in probability? Now we have to see there also has to be liquidity resting below the fair value gap of that bearish order block. So this liquidity will be resting below the fair value gap. Not I said below the fair value gap, so it will be resting here. Be resting somewhere there. Do you see there's liquidity that will be resting below it as buy side liquidity? So we have to see the market trade into it to to test these three key levels before we can see a potential move down for price to sell lower. So this is how we validate it. So if we go down to our higher time frame, lower time frame, if we go down to our lower time frame, you see this setup already panning out, so we can wait and see a reaction here. So this is the place you start looking for a breakout block and others, other things. So now let's scale down to our lower time frame. So let's go to the daily time frame and see how this thing looks like. So look at it on the daily. Just look at the example. Look at what I just showed you. So this is the liquidity point that I was showing. Let me zoom in. So look at the fair value gap. There's liquidity here. So the market came down, aim for the liquidity over here. We can refine it. You can take this, put it there. So look at the liquidities that are here. So liquidity must be sitting below that fair value gap, so which is making it to become high probable. So it must trade into this area. So do you see what happened here? Now do you see what I taught you guys? Accumulation, manipulation, and then bam, distribution. The market went back. So the market distribute, reverse, expand lower. It first expand higher, expand lower, then reverse and distribute lower. Do you see? So this is how you frame up a high probability order block. So I hope this video was very insightful to you guys. If you have any question, just drop a comment through through my private Telegram discussion group. There I'll be able to answer all of your questions. So if you find this video insightful and helpful, or this teaching or this class lesson insightful and helpful, just make sure that you just practice what I've just shown to you. Go to your charts and look for these same price action signatures. So when you do that, you'll be able to understand the criteria of how to look for high probability order block for you to trade off. So do you see how the setups panned out? We have accumulation, manipulation to the upside, testing this mean threshold. Let's look at how the body respects the mean threshold. So it respected it and price expanded lower and price begin to reprice lower. So thank you for watching, and until next time, I'll see you in next class.